Okay, so today we will learn how to scalp in the market. All right, so firstly, I will say you all that remember one thing, which is if you trade only one pair, okay, your accuracy will remain same, or you may say that if you trade in one pair your accuracy will increase. Why? Because if you trade different pairs, like for example if you have lost one trade in euro USD and then you are trying to trade GBP USD and there also you lost a trade, and again in USD JPY there also you lost a trade, so you're trading multiple pairs, so you don't know, okay, in which pair you will be profitable. But just give it a thought that if you're trading only euro USD, okay, so if you're trading only euro USD, then you may lose the present trade, you may lose the second trade, but on the third trade you will win because you are following a strategy and the strategy has an edge on the market. So if you lose once or twice, on the third trade you will of course win. So that's the very basic concept that exists in the market. That is, if you trade only one pair or only one instrument, then your accuracy will remain high. Okay, so that being said, the strategy I'm going to teach you now, which is a scalping strategy, you can try the strategy in multiple pairs. In all the pairs it works very well and good, but if you follow it only in one pair, I will recommend you to follow it only in euro USD, then your accuracy will stay high, and second of all, you can maintain a good profitable percentage in the end of the month. Okay, so now let's hop into the charts and see what is the strategy. So in this strategy, firstly we will need an indicator which is known as Bollinger Bands. I hope you know about it. It's Bollinger Bands. So the settings, my settings is a bit tweaked, so you can see the settings. It's as usual, which remains here. Okay, so in the style section, in the inputs it's in the default settings, but in the style section I just switched off this basic one. Okay, it will be like a line in the middle, so I just turned it off. So and I just changed the upper band and lower band color to white, so you can do it in your way. Anyways, so firstly apply the Bollinger Bands, and now let's come to the strategy. So our strategy will be very simple, which is we will start trading at the beginning of the London session. Okay, so you see these zones formed here, so this is because of this indicator which is known as sessions. So this indicator automatically marks out where is the beginning of the session. So this is the beginning of the London session, this is the beginning of the New York session. Okay, this is the end of the London session, this line, and this is the end of the New York session. So that's pretty simple. So we will start trading from the beginning of the London session. All right, so this is the first condition. Now the second condition is we will put our buys and lows at the liquidity levels. So by that, what do I mean? What do I mean is very simple. For example, you can see that this is the previous session. Okay, so the liquidity zones must be marked of the previous session, which is the Tokyo session. So you may also say the Asian session. So this is the Asian session. Okay, we will mark out both sides liquidity like this and like this. Okay, now what we will do is we will take only one trade. Okay, only one trade per day. We will not take multiple trades. No, the less trade you take, the less risk you have to blow the account. All right, so we will take one trade daily using this strategy, and the first condition is mark out the buy side liquidity, okay, and the sell side liquidity. All right, so now what you're gonna do is you're gonna wait for price to take out those liquidity, and when it does, we will simply take buys and sells. Okay, we will not wait for any confirmations or anything. So how are we going to do that? Let me teach you. So price is coming up and up. So now you can see that price has tapped in this buy side liquidity. All right, so whenever price touches the buy side liquidity and the price is also touching the Bollinger Bands, the upper band. Okay, so you can see this is the upper band of the Bollinger Band, and price is also touching the Bollinger Band as well as the buy side liquidity. So whenever that happens, you can take the trade exactly from there. Exactly, we will not wait for any confirmation. We will just take the trade and wait for our edge to play out. All right, so now comes where will be our SL and TP. Okay, so firstly our SL will be calculated as per our TP. Like for example, if our TP is 10 pips, then only our SL will be 10 pips. So it's a 1:1 trading strategy. Okay, so the less the risk reward you have, the more accuracy you have. All right, so here we will target the recent liquidity or the recent swing low. So you can see that this is the recent swing low. So we will target this low and our SL will be at the exact same. It's a 14.5 pips TP and this will be a 14.5 pips SL. Simple as that. So price touched it and then it gave us a profit. Once we hit a target of the day, which is 1%, we are done. Okay, so what I do personally is that I don't risk 1% on this kind of trades. I risk 2% above. Like I sometimes risk 4% on a single trade or 3% or 2%. So the minimum percentage I risk on this kind of trades is 2%. So that's it, because this is a 1:1 trading strategy, and 1:1 trading strategy has more accuracy, so I can risk more. So this is a very pretty basic example. So you can see that today we had a liquidity sweep here. So you can see that, you can say that, bro, we had a buy side liquidity sweep and price touched it along with the Bollinger Band, upper Bollinger Band. But why can't we take the trade? Because this is not the London session, this is the Asian session. The London session starts from here, so we can't take a trade. We have to take the trade only if the trade is formed inside the London session. So you can see that we have formed a trade here. Price was touching the lower Bollinger Band, so we can take a buy from here, because we have to take the buy where the Bollinger Band is. Okay, whichever is the lowest. So you can see the Bollinger Band is here and is touching, so we can take the trade here. Our TP will be at the swing high and our SL will be at the swing low, which is somewhere here. So our trade is still running. So let's see what happens, and most of the time it wins. So like we don't have to worry anymore. Let's just let our edge play out. So this is a pretty basic example. Let's move on here. So here you can see this is a buy side liquidity which was taken out by the market previously, so we don't have any trade here. All right, and the sell side liquidity was not taken, so we don't have a single trade on this day. All right, so now you can see that new liquidity has been formed here, which is a buy side liquidity. All right, you can see that, right? Like we have a new buy side liquidity here, which is formed here, and price was touching the liquidity as well as the Bollinger Band, so we can take a trade here. Absolutely we can. And our TP will be at the swing low and our SL will be at 1:1. So here we have an SL. All right, that's not a problem. One trade done for the day. Let's just move out. On the next day you can see, okay, so I marked it out previously, so anyways that's not a problem. Let's just move it like this. Yeah, this is the Asian session. Let's mark out the buy side and sell side liquidity. Here you can see. So you can see very clearly that price has, like whenever the market started in the London session, price tapped in the liquidity. So whenever it taps in, we will take our buy. Why? Because market is touching our liquidity point as well as it is touching the lower Bollinger Band. All right, both conditions are met, so we can take the trade. Our TP will be at the swing high and our SL will be here. So here we have another clean trade. All right, so here let's move on to here and let's mark out the liquidity zones here. All right, very good. So now you can see very clearly that after the market started, okay, it tapped in the sell side liquidity, okay, and it also touched the Bollinger Band. So we can take our trade from here. Our TP will be at the swing high and our SL will be at the swing low, which is somewhere here. All right, so we got our trade here, another 2%, so 2 to 4%, and the previous one is 6%, but there we had a loss. So for now we have a 4% profit. So like this, we can move on. We can see for other trades. Like here you can see that the liquidity was taken out before the lunch started, so we can't take a trade. Here we can see trade forming. Let's take the trade. This was the Asian session low, the sell side liquidity, high and low. Okay, so here we have an SL. All right, so okay, again I marked something here, not a problem. Let's mark it again. So for now we had this buy side liquidity and this sell side liquidity. So you can see that before the London session started, we cleaned out the sell side buy side liquidity, so we can't take any trade anymore here. So anyways, we can take this trade, but on the sell side liquidity we saw that price tapped in, but it was not touching the Bollinger Bands. All right, it was not touching the Bollinger Band. So what we will do, we will wait for price to touch the Bollinger Band. Whenever after clearing the sweep, price touches the Bollinger Band, we will take the trade here. Okay, we will take the first touch here, we'll take the trade. Our TP will be at the swing high and our SL will be at the 1:1, which is here, and that's a clean trade. All right, so like this you can backtest and see how it performs in the long term, because I have backtested it myself and it's a very good trading strategy because it personally makes me a lot of money. I trade using all these concepts, like all the strategies that I'm going to teach you in this private mentorship. I use all of them myself, so you can see it for yourself. So anyways, this is the very pretty basic simple strategy. So yeah, that's it.